Apple is the world's most valuable company. It's one of the most dominant businesses and the most iconic brands recognized globally. It's also been one of the best performing stocks over the last several decades and is now the largest holding in the S&P 500 index. If you wanted to own some of Apple's business, of course, you could do it by buying Apple's stock. However, I don't think that's the smartest way to do it. The smartest way, in my opinion, is to buy it through Berkshire Hathaway. When you do, I think you are getting Apple's share for free. In this video, I'm going to show you how.
This video is for educational purposes only. It should not be considered investment, legal, or tax advice. It is not an offer to buy or sell any security. Past performance does not indicate future results. Investing is risky.
Berkshire Hathaway is made up of several different types of businesses. The sheer number makes it very difficult for the market to evaluate what Berkshire is actually worth. So let's take a shot. The overall market cap of Berkshire right now is $715 billion. Of that 715, we can break it down into several different buckets. We've got cash, which currently is $146 billion. Next, we have the publicly traded stocks. This portfolio includes Bank of America, Coca-Cola, Moody's, American Express, and of course Apple, but we'll talk about that in a minute. If you exclude Apple, this portfolio has a market value today, April 29th, of $172.8 billion. It's impossible to argue the value of these two since we know what cash they have on the balance sheet and we know exactly the market value of these publicly traded companies. What's more difficult for the market to evaluate is the private holdings. Berkshire has a number of different businesses ranging from Nebraska Furniture Mart to Lubrizol to Pampered Chef. It's a sprawling empire of many different businesses and many different types of industries. But there are really three main areas. There is Berkshire Energy. This is comprised of 4 regulated utilities and 5 natural gas pipelines. In 2021, this business generated operating earnings of $3.495 billion. So how much is this particular business worth? Well, we can calculate it based on some comparisons. I'm going to use ONEOK and NextEra Energy as the comparisons. ONEOK is a natural gas pipeline and NextEra is a regulated utility, Florida Power and Light, along with a solar and wind alternative energy business similar to Berkshire. ONEOK currently trades at a market cap of $29.5 billion. If we divide that by their operating income of $2.9 billion, they trade at about 10 times operating income. NextEra earned $5.36 billion in 2019, which was their highest operating income in the last few years. If we look at the current market cap, that gets us to an operating income market cap ratio of about 26.7 times. So if we just average 10 and 26.7, that gets us to 18.4, which I think is a reasonable multiple to put on this energy portfolio. So if we do take 3.495 billion and multiply that by 18.4, we get an estimated fair value of about $64.3 billion. Next, we'll look at Burlington Northern. This is the railroad that operates primarily in the West Coast. Last year, this division earned $5.99 billion. And if we do the exact same thing here, only using Union Pacific as our comparison, Union Pacific earned $9.3 billion in operating revenue last year at a market cap of $149 billion. Gives them about a 16 times operating income ratio. If we take 5.99 and multiply that by 16, that gets us to an approximate value of $95.84 billion. We'll do the same thing for the insurance businesses. They pulled in investment income and underwriting profits of $5.5 $1.535 billion. If we multiply that by the same ratio that Progressive trades at, which is 15.15 times operating income, that gets us to an approximate market value of $83.855 billion. And then finally, there are the other businesses, which include Dairy Queen, Acme Brick, Benjamin Moore Paints, Clayton Manufactured Homes. If you look at these businesses, they added up operating income of $11.12 billion. Since these are a bunch of different businesses from a bunch of different sectors, let's just assume that they get a conservative PE ratio of, say, 15 times. Right now, the S&P trades for around 18 times, so I think this is a pretty conservative estimate given the quality nature of these companies. But if we multiply by 15, that gets us an estimated value of $166.8 billion for these other businesses. So now if we simply add up the cash, the value of the publicly traded businesses minus Apple, plus the value of the energy business, the railroad business, the insurance business, and the other portfolio, you arrive at a valuation of $730 billion, which is actually more than what the current market cap is for Berkshire. And we have not even considered Apple. So Berkshire has 887 million shares of Apple, which at the current share price comes out to about $140 billion. So if we add the estimated market value of all of these different pieces plus the Apple shares, Berkshire Hathaway should be trading, in my estimation, around a market cap of $870 billion, which overall is about 21% too cheap, using very similar and relatively conservative estimates for all of these other extremely high quality businesses. So that is why I think regardless of what Berkshire announces today, no matter how many supply chain issues they may or may not have, Berkshire Hathaway at these prices is like getting shares of Apple for free. It's one of the most high quality businesses that you can find in the S&P 500, managed by one of the most iconic investors of the last century. For more data-driven investing content, subscribe to my channel. If you liked this video, give me a thumbs up. Thanks for watching, and I'll see you in the next video.